is what we are witnessing. But Rajesh Palviya also joins us on the show. Rajesh, what's your take on the Nifty? When are we hitting those life highs?
Yeah, good morning. So sooner or later, yeah, possibly next week we are going to have a new all-time high for Nifty. As Nifty is having major call concentration at 18,800, 700 strikes still. But yes, some short covering action was there in the previous trading session. So if we continues to hold above 18,700, 750, then possibly another round of short covering can be there in Nifty, and then that will help Nifty to scale to the new all-time high. So yes, possibly yes. Post this weekly expiry, we may hit a new all-time high for Nifty. But interesting setup is for Bank Nifty. Bank Nifty has witnessed the long build-up in the previous trading session, and almost looking at the data setup, we do believe that Bank Nifty can give further more support from current level, and possibly 44,500 could be the immediate target for Bank Nifty in the continuation of this uptrend which we are seeing since last couple of weeks. So Bank Nifty as well as Nifty both are on the buy side. For Nifty, we are projecting target of 18,780 to 18,800. The keep stop loss of 18,680 to remain on the long side for Nifty. And for Bank Nifty, we are projecting target of 44,500. Stop losses should be around 43,950. So both indices are looking promising, and the data setup in the previous session was clearly indicating that yes, this rally can extend, and we are going to have a new all-time high for Nifty very soon.
Okay, let's talk about some stocks as well. Kunal, what's going to lead us higher? What should one go long on?
So of course, large cap stocks would be the ones which should be preferred bets, but then I'm betting on the momentum ones, and the likes of DLF, for example. The real estate sector has been doing exceptionally well. DLF has also done reasonably well. So almost a month back, the stock confirmed a breakout of its golden crossover where the 50 DMA crossed above the 200 DMA. That was almost at 420, 425 for DLF, and the stock is now crossed the 500 mark, which means the trend, the momentum is quite strong. Would expect the stock to head towards 525 near-term targets. Stop loss for this trade could be kept at 488. Havells is the other stock which also has done reasonably well from 1200 levels to now 1350 approximately. Looks attractive because of the way the last 1 week of setup is. It's almost a consolidation for Havells over the last 1 week. So I'm expecting a breakout, almost an 7 to 8% up move. 1450 as a target. Stop loss at 1300.
Okay, so Havells and DLF, these are the two top picks coming in from Kunal. Rajesh, what about you? What are the stocks that you're identifying?
So first stock is Aditya Birla Fashion Retail. Stock has recovered from its oversold trajectory, and on the weekly chart, stock managed to give breakout of its falling channel on the weekly chart. Looking at the long built up in the previous session, we do believe that Aditya Birla Fashion Retail can continue furthermore upside from the current level. The strong buying interest was there in the previous session. We expect a target of 225 in the near term. One can keep a stop loss of 202. Another stock is the same. Kunal has already covered that DLF. We are bullish on the real estate space. So DLF is the pick where we are projecting target of 525, 530. The stop losses is 490. The whole space is moving up. So Lodha, Prestige, Shobha, all stocks are showing good traction. So we believe that real estate space can continue further more momentum from the current level. Another stock is from automobile space, that is Ashok Leyland. Stock has completed its consolidation, and now looking at the data setup, we believe that that the stock is now poised for giving breakout of its multiple supply zone on the daily as well as on the weekly chart. Looking at the data setup, we expect that Ashok Leyland can scale up to the target of 160 to 165. One can buy this stock with stop loss of 151.
Okay, let's move on. We will address all the stocks in news as well this morning. But as you know, ET now continues its 14-year celebrations this Friday with exclusive interactions featuring top leaders of India Inc. Here are a slice of the conversation we had with Sanjeev Bikhchandani, co-founder and vice chairman of InfoEdge, where he shares insights on Zomato's journey towards profitability and more.
So, look, we look at the underlying. We look at how the business is actually doing, right? Now, Zomato listed at, it offered in the IPO at about 76 rupees. The share price went up to about 150. I don't recall how much it went up to. That was in the aftermarket. Globally, the market corrected. Indian markets corrected a few months later. Zomato corrected. It went down to somewhere in the early 40s when the lockup expired. It's back up to roughly the IPO offer price right now. I think a couple of days back. as the company performance goes on improving. So at least some of this is global trends. Some of it is uh, is reduced appetite for public market investors in India to continue to hold loss-making startups. A definite signal to Zomato and Policybazaar, guys, get to profit, which is what they're trying to do, and I think they're succeeding. So some of that, I would not worry too much about share price if you're a long-term investor. If the company underlying metrics are good, it'll get back.
Okay, let's just focus to some of the exclusive details that we are getting for you. We understand that Tesla has been looking at deepening its presence in India, but what is it doing with respect to making the tie-ups with certain OEMs? What have been the conversation like with the government officials? Let's go across to my colleague Prakash. He's joining us with the latest on the story.
So the government officials are informing that it was an excellent meeting with the Tesla officials when they were here, and discussions are moving in a positive direction. The government is evaluating on various aspects before commenting anything on record, but the sources are confirming that the Tesla has shown keen interest on India, and discussions are also going on in the finance ministry on various aspects. When it comes to provide incentives, which has been their key demand, sources are informing that it will come with various conditions. Government wants Tesla to consider India as its potential production and innovation hub. Tesla has also shown interest on the proposal of the Indian government to establish a vendor base here in India. As you are aware that Tesla has a strong vendor base, including manufacturing facilities in China at present, but it is the fact that Tesla has now recognized the potential of India, and it is exploring various opportunities to enter in the Indian market.
And Maruti is set to launch its costliest vehicle ever on July 5th. That's called Invicto. This will also be first Toyota vehicle that is going to be rebadged and sold through Maruti Suzuki's outlets under the Global Toyota Suzuki Alliance. Now, this premium multi-purpose vehicle that will sit above the Grand Vitara will be sold via the Nexa outlets. In fact, my colleague Sumit Chaturvedi spoke with Shashank Srivastav, and here's what he told him.
So we will have to wait for some time to see the booking trends and what are the trends post the price announcement before we come to a conclusion about what the stable demand would be. But really this segment overall, if you look at the 3-row SUV MPV segments, was about 258,000 last year, out of which in the premium side, which is greater than 20 lakh category, was about 110,000. So the volumes are, there are 8 players in this segment, including the Carens, the Alcazar, the Hector Plus, the Scorpio and the XUV 700 and so on. So the volumes may not be very large, but it's also a good way of participating in a segment which is rapidly growing. The greater than 10 lakh category has grown to be 5% of the industry. It was just 1% a couple of years back.
And so, looking at overall market, this is going to be only automatic variant, as we understand.
So the variant strategy and what all the variants will be available at what prices will be announcing on the 5th of July at the time of launch of the Invicto.
Okay, so that's the latest launch coming in from Maruti. But on that note, taking a very short break. Don't go anywhere.
Back with the market right here in 18 the SGX Nifty indicating a mildly positive start, and we seem to be in good momentum. We're already at that 18,700 print once again. But let's talk about all the stocks and news this morning. And the RBI may soon be tightening norms for unsecured lending by regulated entities. Now, we at ET Now have learned from sources that the regulator may increase risk weightage for unsecured lendings. Ankur is here with more on what his sources are telling him.
Yes, the Reserve Bank of India may announce a tightened norm for unsecured lending, and what we understand is that these announcements are likely to be made very soon, as sources have told us that there has been meetings which has been held between bankers and the regulator has already taken details of such portfolio by the banks. In fact, they had asked for monthly data of such unsecured lending and how much growth has happened in the past. Although the regulator never intervenes in the kind of growth or there is no X number which has been given by the regulator to the lenders on this much growth should happen. But all in all, the regulator wants that even with the fast pace of the growth, the balance sheet of the banks should be secured. And in some instances, especially with few banks, the regulator has found that the practices which has been taken by the banks may not be suiting to its balance sheet, and therefore a tightened norms may be announced by the regulator. The announcements could include increased risk weights for the banks for such kind of lendings. Remember, unsecured lending refers to personal loans or credit card outstandings, and if at all there is an announcement by the regulator on such norms, the impact will be on banks, NBFCs, as well as the credit card companies which are giving such kind of loans.
Thanks, Ankur, for that. But we were just discussing how perhaps this rally would take a pause when the IPO frenzy and the supply frenzy really begins. But what's the scorecard like for the last frenzy that we had seen of IPOs when all of these new age tech companies had come up with their IPOs? Let's take stock of all of that. Somit is joining us with that analysis.
Well, if you see in the last 3 financial years, more than 100 companies had come out with the IPOs. But let's look at the scorecard of how they have performed so far. So in FY21, if you see out of the total 30 companies that came out with the IPOs, 7 of them are still trading below their issue price, while 23 of them are above the issue price. Of the 53 companies that came out with their IPO in FY22, nearly 24 of them are still trading below their issue price. And of the 37 companies that came out with their IPO in the last financial year, that is FY23, 11 of them are still trading below their issue price. Now, if you see the companies that are trading significantly below their issue price, firstly on the list is Car Trade, and it's trading nearly 67% below its issue price, and that's owing to expensive valuation and muted growth that we have seen since listing. For AGS Transact, it's the losses owing to higher provisioning that has led to a 66% fall in the share prices of the company compared to its issue price. For Fino Payments, it was the increasing competition and volatile margins that led to this fall. And for Paytm, it was the losses, expensive valuation, and the rising interest rate. And for Surya, the small finance bank, if you see, it was the asset quality challenges, elevated credit costs, and margin contraction that led to a 50% drop in the share prices compared to its issue price. Apart from that, there's Aditya Birla AMC, Shriram Properties, Star Health, Herenba Industries, and Ellen Electronics that have fallen nearly 40 to 50% compared to its issue price. Now, however, there are some gainers also. In fact, gainers on the list are much higher compared to the losers. And on the gainers list, first on the list is Mazgaon Dock, and that's largely owing to the fact that the government's focus towards procuring products from the domestic market has increased sharply, and this has also led to a sharp rise in the share prices of Mazgaon Dock. In fact, it's not only Mazgaon, there's also Paris Defense and Data Patterns on the list. All three are defense companies. Then there is MTAR Tech, which is gained nearly to 35% compared to its issue price, and that is because of its focus towards renewable energy. Then there is Happiest Mind, which has grown on the back of strong growth, which has led to this strong performance. For Angel Broking, it was the rising user base, along with this rising market share, has also aided the rise in the share prices of Angel Broking. Then there is Likhita Infrastructure, Hariom Pipes, Root Mobile, Venus Pipes. So specifically for Venus Pipes, if you see, it's the capacity expansion, rising volumes that has led to this rise in the share prices of Venus Pipe as compared to its issue price.
Samit, we'll leave it at that. Well, India has seen, or rather is being seen as a sweet spot amongst global investors clearly, and that's also the word coming in according to DP Singh, the Deputy MD and Chief Business Officer at SBI Mutual Fund. While speaking with ETNA's Anurag Joshi, he shared that the momentum of gains in India's equity markets will sustain.
There are a lot of headwinds in the other developed countries. So India is being seen as a very sweet spot at this point of time because of our internal demand. That is number one.
and number two, because of our geopolitical strategies which country is playing around, which gives us a lot of tailwinds actually, which we are importing oil at a very competitive price. We have a lot of our foreign exchange reserves are again touching almost $600 billion. So all these are very sound signs. Most of the countries who are affected with the conflict, their currency position or their balance sheet will not be as strong as our balance sheet is. So that gives another sense of comfort to the international investors. So I am sure that this momentum will continue.
And do you see any change in global allocations from global equity funds to India because of this particular factor?
There are two parts of it. One, the overall kitty of for investment in foreign countries by those economies has shrunk what it was earlier. But at the same time, there's a great attraction for Indian market, Indian stocks, India as an economy. So naturally, even at the shrunk wallet size of the foreign investors, with the higher allocation, they are looking at India in a much better way because they feel.
Okay, let's pose exactly that question to Dipan Mehta as well. Dipan, hi, morning, good to have you on the show. The rains are here and it seems like the momentum is back once again, where at 18,700 seems like this time maybe we could give an attempt to that all-time high on the Nifty.
Yeah, absolutely. Good morning and thank you for having me on your show. And as I had said many times on your show that monsoon is the best time for capital markets. I can say that with my 50 years experience that these are the great times for stock markets on most monsoons. And I'm very certain that this monsoon we will see the markets at significantly higher levels. I'm not just talking about breaching the previous highs, I'm talking about maybe 5-10% higher high than the previous one. So these are great times. We are seeing fantastic liquidity flows coming into the equity markets, and the selling from the FIs is certainly dissipated completely. And the most important thing is that the portfolios are doing really well. The way the small mid-cap stocks are jumping up, be it on positive news flow, be it on institutional buying, there are many reasons. But by and large, I think investors are really a happy lot, and their patience has been rewarded in a handsome fashion with the kind of returns generated over the past 2-3 months.
Okay, here's some interesting data, Dipan. You just may want to be with us. What we've done is that we've looked at the P multiple, the current, the 5-year average, and the peak P multiples at which the Nifty, the small cap, and the mid cap index historically have peaked out. So what we are looking at is the current multiple, the 5-year average, which includes this entire COVID cycle, and that's a reasonable estimate. And then we've looked at the period at which these indices historically have peaked out. Now, the Nifty is 1% away from an all-time high. Mid cap is at an all-time high. Small cap index is 12% away from its all-time high. You want to look at the P multiples, not the returns over the years. The P multiple, I think, is what is important. So, here's how the data looks like. If one looks at the Nifty current P multiple, it is below the 5-year average. The Nifty mid cap 100 index, it is nowhere close to its peak and it is still below the 5-year average. In the small cap index, the pin is at 14.5 12-month forward, and again it is below the 5-year average. So can I safely say that there is a really long way to go before this market peaks out purely based on valuations?
First of all, Nicholas, thank you for this fantastic analysis, and it just it builds my conviction of very good times for small mid-cap companies and overall our equity market going forward. And I think the wild card here also is the earnings, and largely I think because of lower inflation, raw material prices stabilizing to slightly declining, and a lot of the companies have already taken price increases in the past few months or so on the back of rising inflation. I don't think we are seeing that many price cuts going ahead. So we could see expansion of the operating profit margins as well, and that in turn leads to higher return on capital employed, and that in turn justifies higher price to earnings multiples. So I think what we have over here is a beautiful virtuous cycle of rising profit margins, rising return ratios leading to higher P multiples, and all of this I think is going to catapult our markets to newer highs. And I think this is the best time. I think if you have got less allocation in equity, I think these are great times. I sense that there's going to be a breakout in the larger indices over the next few weeks or so.
Okay, but like any other market peak, what we were discussing also is the intriguing factor this time around that the blue chips of the blue chips haven't quite participated yet. Be it Reliance, be it HDFC Bank, be it Infosys, TCS, tech of course can be clubbed within the underperforming pack for various other reasons. But Dipan, when do we see a push coming in from HDFC Bank and Reliance?
So I think these are very large counters and they require heavy institutional flows and I think more likely FPI flows to move these stocks higher. They have been in a way outperforming, at least Reliance Industries has been, if you take a multi-year view, like 5-10 year type of a view, then certainly Reliance has been driving the Sensex and Nifty much higher. And I think that it's just a matter of time before these stocks also start to get their rhythm right. And coming specifically to HDFC Bank, I think the big event that we're all waiting for is the merger. And when these stocks will start trading on a merged basis, that means HDFC of course be delisted or gets consumed by HDFC Bank. And that I think will give a clearer picture of what the financials are. I think that there is still some confusion in the minds about institutional investors about the weightage of these companies within the broader indices. I think all of those uncertainties will get sorted out once we have a merged entity listed on the exchanges. And I think that could be a big trigger for the stock price of the combined entity to move much higher. In any case, I think economy is doing very well. Banking stocks and banking industry also is doing very well. The demand for credit is good. And HDFC with its brand and technology is going to be a big beneficiary. In any case, I think they have extremely attractive CASA ratios and are able to generate resources at a very low interest rate, and that's a key strength in a competitive industry like banking.
On my radar. First is Tata Com. Why do I have Tata Com on my radar? Well, the stock yesterday really went through the roof. It's made a new high, almost a new high. And Tata Com is one stock which is up 23% in June itself. Best monthly gain since July 2020. They had an analyst day where they did speak about how the data business actually could double. Now, unlike what is happening in the IT sector, Tata Com is in a position where the data and what is happening to the IT service sector cannot be compared. The data business of security data delivery in the network system, I think, is growing. And for IT companies, it's a slowdown which is happening in the BFSI space, and the cloud business, I think, is not growing at the rate at which market had anticipated. So Tata Com, in a sense, has moved out to be one of the standout gainers. The point is, what do you do now? Yesterday, the stock went up because of this buzz of MSCI, but my sense is that Tata Com now is trading above the most consensus price target for most of the brokerages. Second, the data growth is not going to be a one-quarter phenomenon. It's going to take a couple of quarters before that growth comes back. C, they will have to lever up their balance sheet. So my sense is that in the near term, best part of the earnings and the stock re-rating could be behind us. So the surge in the Tata Com may not be really lasting for a long period of time, given what they've indicated in terms of where the balance sheet is moving and how things are moving. Second, I've got SBI Cards. Margins nearing a bottom as rate cycle peaks. This is something which we should historically understand about credit card companies. When the rate cycle or interest rate cycle is strong, credit card companies will always have a problem in terms of margins. Unlike banks where they benefit when the rate cycle starts, especially the large banks. In credit card, I think it's the reverse. SBI, I think SBI card has been standout franchise there. Their book, I think, is of excellent quality. The stock was the halo stock. It's not really the halo stock now. And then if one really looks at the CAGR growth of the industry, the retail digital spend, I think, is growing at 47% and is projected to go at 30%. So I think this really could be the dark horse
going forward, looking at where one of the big beneficiary of the rate cut cycle would come. So I'll take my chances. Tata Com stroke SBI cards. You track both of them, none of them, one of them, you can choose. No, I track both of them. I have invested in in SBI cards, still remain invested in Tata Communication. I had invested for several years, and then I threw in the towel because the returns were just subpar. You know what is the common thread between both these companies? They have both lived below their potential. Tata Communications, I think they've been talking about this data story for many years. Rise in data traffic is not a new phenomenon. It's been there right from last 4 or 5 years or so. It's been picking up. And there was a beautiful opportunity during the COVID when data traffic really shot and went through the roof. So many more new applications went onto the internet, and we had the Zoom calls and the OTT, the proliferation of OTT channels. That has all led to higher data consumption. But look at the way Tata Communications data business has shaped up. It is still in that low to mid single digit type of volume growth. Margins also are pretty much flat. From time to time, they do talk about this business and how it has the potential to scale up, but it always disappoints when you see the actual numbers on the ground. That is as far as Tata Com is concerned. SBI Cards also, for some reason or the other, has not lived to its full potential. Sometimes it is the revolver lending that has slowed down. Sometimes it is some exceptional provisions which they have to make. Something or the other is not going right for SBI Cards. But I have more hope in SBI Cards than Tata Com at this point of time. And one point in SBI Cards which perhaps has been missed over here is this linking of credit cards to UPI. So if you have a RuPay card, just now you can link it to your UPI, and every time you make a payment, instead of it hitting your savings bank account, it will go and hit your credit card. And that way you can earn points and get at least a few weeks of credit on the spending you have taken place. And as and when they get Mastercard and Visa also on the UPI platform, that will be a very big positive trigger for all credit card companies. And credit card business per se, I think globally also is exceptionally good business, and with very high net interest margins and good volume growth as well. So very positive on SBI Cards. Again, a disclosure here that we and our clients are invested, but not so much on Tata Communications, only because of its track record.
Now you track the charts of Tata Com and SBI Card. What are they reading?
So Talagom was one of the recommendations which I think which you've given at 1250 odd levels. It's done reasonably well, but I think now at 1650 mark, it doesn't make sense to initiate a buy on Talacom. Now, there are two reasons for it. One is because of the way the stock inherently has been. It's been a traditionally moderate beta kind of a stock, and in the last 1 month, the stock has risen up some 20-25%. That itself probably puts the near-term charts into a bit of an overbought nature in terms of indicators. And the second, the most important point is that Tata Communication at current levels of say 1600 approximately is almost at a 350 point plus divergence from its 200 moving average. That's a steep 25 to 30% from its medium term, from its long term moving average. That itself makes the trade a bit more steep or extreme at current levels. So that's one of the reasons why that's a couple of the reasons why I would believe that Tata Communication at current levels could be good enough profit booking candidate rather than building up fresh longs. Yeah, but if the stock corrects say another 5 to 10%, then it could probably be a good buy on dips kind of a strategy. SBI Cards, on the other hand, the stock is just breaking out of its consolidation. I think last week the stock has given a golden crossover where the 50 DMA has crossed back about its 200 moving average, and more importantly, the slope of the 50 DMA is also quite steep enough, indicated that the stock should rally up at least another 5 to 10% over the very near term. So SBI Cards could be something to look out for, possibly with a target of 1050 to 1100.
Okay, so that was about Tata Communication and SBI Card. But Rajesh, wanted to ask you about a couple of breakout counters that we saw yesterday. Laurus Labs, as well as we saw quite a bit of surge on macro tech developers.
So Laurus Lab, this is the third consecutive month where stock is forming higher high-low formation. It clearly suggests that the stock has completed its base formation from oversold territory. Now stock is in recovery mode. So looking at the setup for near term to short term, we believe that Laurus Lab can continue further more upside as the breakout is clearly there on the weekly as well as on the daily chart. We expect a target of around 395 to 400 in the continuation of this pullback rally which we are seeing. One can buy this stock also with stop loss of 345. Macro tech developer, a very strong breakout we have witnessed in the stock. most of the stocks from that segment is continuously moving up, and the stock managed to give breakout of its multiple supply zone on the weekly chart. So looking at the chart pattern, if stocks continues to hold above 640 level on a weekly closing basis, then possibly next target for the stock could be around 750 to 800 in the continuation of this uptrend.
Okay, Rajesh, so that's the take coming in as far as Lodha and Laurus Labs is concerned. We let you go on that note. Appreciate you joining us on the show. But Dipin,